All right, everyone. As I stated yesterday, I wanted to see the intraday lows of Friday hold for me to stay positive on the overall possible rally attempt off the February lows. That happened in the NASDAQ, but it's really not that big of a deal for me because it was another distribution day. These distribution days are just piling up since the April highs, and it's becoming just too much for me to ignore. So the NASDAQ model has not yet changed to a neutral condition, but if it can actually eclipse these Friday lows, 429 lows, you can be sure that our models are going to be switching to a neutral, operational neutral signal on this market, especially if it closes below it. The NYSE, it's traded already below it, and you can see that 1040, 1048 or 10370 was the low, and you can see 10365 is the close. So for me, the NYSE is still under an operational buy mode, but I'm definitely leaning neutral in that index. It's got to break the 50 and 200 for me to turn bearish on it. Same with S&P 500. It's still actually holding the lows, but if it takes out those lows on a closing basis, it'll probably also take out the 50-day moving average, and I'll go neutral on that index. And the Russell 2000, taking out the 200-day moving average and the intraday Friday lows, this is having me go all of a sudden neutral on this index. So I definitely feel neutral, especially if you look at IWM. I know that there was a good intraday reversal. Technically off the lows wasn't good or great. I mean, it wasn't great. It wasn't really good, but it was okay, I guess I should say. It was an okay reversal off the intraday lows. But there's just a lot of damage short term out there. The good news is there's still some patterns out there that look good. We had a nice winner today in FN, and we have a lot of stocks not failing. But at the same time, stocks like EDUC, 100% sell. EGPT is speculative, higher quality because it was an ETF play on Egypt, just possibly a world bull market. That's a full sell signal. And nothing was lost there because I even had a very tiny position thanks to already being fully invested, basically. And COHR failed. But besides COHR and EDUC, those were my only, everything else worked. So COHR failed, barely failed too on top of that. And EDUC failed miserably, so that's it. And then there was EGPT. But FPRX is closing below the 20-day moving average, convincingly on above average volume, so that's 50%. I've been completely knocked out of PRAH on my end, but closing below the 50-day moving average and still holding that 428 support level makes that a 50% sell. PYPL closing below the 50-day moving average, 50% sell. EPIQ, this one sucks, man. I tell you what. This is how bad this market is. So you get a new long signal like this, works out immediately. You can be almost 100% sure the most of the time that you're going to get a 20% gain in just a couple to 3 weeks. Instead, it just does the complete opposite and on lower volume the whole way. So it's just a mess. I mean, that's not how stocks should be acting. This just tells you how weak this market uptrend still is. It could get better. It still has the underpinnings to become a great rally, but that February to now rally is trash, has been trash. I've said it before, it's been trash. The only thing that's been good about it is that we had great breadth and we kept getting all these long signals, and they were all semi-working to working. Now they're semi-working to not working. So it's just a complete change of character, and it's not surprising following the low volume rally. P&K, once adjusted for whatever the hell split it did there, I never got a position in it, but P&K is a 50% sell signal. And so is URTY, and then CVGI, speculative position. I'm already completely knocked out of it. But to me, with the way that it's rolling over, closing below the 50 and 20-day moving average on the uptick in volume, that is also a 50% sell signal. Now, with all the sell signals, and that actually there could have been a ton more. Remember, we got a lot of long positions. We've got like 60 long positions in these two accounts. So I'm following 60 stocks that I am long in my margin and cash account. So that's a lot of long positions. But don't forget, there's still names that I've missed and passed on that are still rocking, like GDEN. This thing is only up now, 12% in a short amount of time. So there's still good names out there. And on that note, we actually had two long signals today. RSYS is giving an ad signal, but unfortunately, RSYS had earnings this evening. The last time I checked after hours, it's trading at 451, so it's only up 1 cent a share. If it gaps up tomorrow, great. My limit order will be 454. If it shows that it's opening where it is now, then my limit order is going to be 450. I'm not paying up. If it's gapping down below 431, there is no trade. But RSYS was canceling quality. I've missed, it's a 1% add signal, but because of earnings being out of the way, it's just 0.5%. So only 0.5% of my account capital, a couple of grand, is going to go into our SYS. Our cut loss is very clear. It's 425. Yep, it's 425. So if it moves below 425, I'll be out of our SYS. No harm, no foul. And the only legitimate new long signal I got today was in TripAdvisor. TripAdvisor, though, has earnings after the bell tomorrow. So very dangerous long position. But what I want to show you about it is look at this price pattern. Do you notice the stair-stepping lower or higher lows, higher lows, higher lows? Do you see the tightening up of the price trading range? Do you see the below average volume as this price tightens up? And then do you see how once it bounces off the 50-day moving average, it has a pocket pivot point signal with BOP going green? Perfect. And then making it even more perfect, price is not only touching the 20, 10, and 5-day moving average, but the 10's above the 20 and the 5's above the 10. This is a perfectly set up long position with the 20, 10, 5 stacked on top of each other and price bouncing right off the 50-day moving average with the pocket pivot point signal. Too bad earnings are 5-4 after the market close. However, the last long I took like this, LOGM, it had earnings a few more days away, which was a completely different situation because we could cut our loss if we were wrong. But it worked out, so I'm going to see if Trip can do the same thing even though it's speculative. I have a feeling it's probably washed out. It has a higher chance of gapping up on earnings than gapping down since it's so washed up, but anything can happen. Still, it's a higher quality stock. It's a former CanSlim quality stock. It still has a 90 composite rating, but obviously things have fallen, off the highs. But overall, TripAdvisor, still a good solid stock. I like it. So it's a new long position. 1% for only being price volume BOP. Taken in half since earnings are tomorrow. So 0.5% into Trip, 0.5% into RSYS. That's it.